FXN Mentoring. What's up, guys? Welcome back to Trading with Market Makers, and welcome to week 12. We've made it to the final week. So, first of all, congratulations on making it to the final week. It's been 12 weeks, and it seems like it's gone through so fast. But the first thing I want to say is thank you. Thank you for taking the time out of your lives for the last 12 weeks to learn and really put into this particular program. So thank you for doing that. I know it's everybody has their own sacrifices that they make. So I just want to personally say thank you for getting to this particular point. All right. So in this final week, let's go ahead and get literally right into it because I believe this is probably going to be a pretty long video. So the first things first, let's go ahead and go into what I need to talk to you guys about. The first topic, which is news events. Right, we really haven't covered news events or really talked about news events throughout this course. So we're going to talk about it now, and we're going to break them down now so you can finally see what I'm talking about of why the importance of news events and why I do not like to trade in those particular news events. So let's go ahead and first break down the different news events that you should be paying attention to for the pairs. So there are news events that matter, and there are news events that really don't matter. Okay, so let's go over the news events that actually matter. This is the only ones that we're going to cover on this particular topic. Okay, so the first things first is going to be the news events that matter to all pairs, right? So these are news events that actually affect literally all the pairs. It doesn't matter what pairs you're trading. Okay, so the first thing is going to be the OPEC meetings. Okay, so the OPEC meetings. Why are the OPEC meetings important? So OPEC meetings are basically meetings that are attended and represented by the top 15 oil-rich nations. And essentially, they discuss a range of issues regarding energy markets and, most importantly, agree on how much oil they will produce. Obviously, the meetings are closed to the press, but officials usually talk with reporters throughout the day, and a formal statement covering the policy shifts and meeting objectives is released after the meetings have concluded. Now, why would we care? Why should we care? Is OPEC nations represent around 40% of the world's oil supply and are unified in their oil production levels. With so much control over the oil supply, shifts in their production levels can significantly change or impact oil prices, which would also impact prices of the actual currencies. So if you don't know, for example, Canadian dollar is heavily involved with oil. Canada is heavily involved with oil. So is the US, for example. So a lot of the things that would happen with oil would affect their currency specifically. The next one is going to be the Jackson Hole, and all of these, by the way, are going to be meetings. Okay, so Jackson Hole, it's an economic policy symposium, basically a meeting that's held in Jackson Hole, Wyoming, and is attended by central bankers, finance ministers, academics, financial market participants from around the world. The meetings are closed to the press, of course, but officials usually talk with reporters throughout the day Comments and speeches from central bankers and other influential officials can create significant market volatility. So that's why we pay attention to the Jackson Hole. Okay. The next is G7. So G7 meetings, while it's not an institution, right, the G7 is an influential global policy making body operating at the highest level, and their incentives or their initiatives can have a substantial impact on currency markets. So G7 meetings are essentially attended, as I said, by financial ministers or finance ministers, central bankers, and from 7 industrialized nations. Essentially, you're looking at Canada, Italy, France, Germany, Japan, UK, and the US. Okay, as I said before, the meetings are closed for press, but they usually talk to press throughout the entire day, and a formal statement covering the policy shifts and meeting objectives and stuff like that. Same thing are released once the meetings are concluded. Okay. The next one is G20 meetings. Basically, it's kind of very similar to the G7 meetings, but the G20 meetings, instead of being, 7 nations, there's 20 nations. Okay, it's the same thing. They're attended by finance ministers, central bankers from 20 industrialized nations. Same thing as before. The meetings are obviously closed, but officials do talk through reporters throughout the day, and then an actual official statement is actually released at the end of the meeting. Okay. The G20 and the G7 meetings are basically influential global policy making, right? So they affect everyone at the highest level. And so the incentives, policies will impact the currency market, which is why you need to pay attention to them. Okay, so these 4 meetings are the main 4 meetings that will affect all pairs. And so for me, when I look at news, guys, I think of news as this. I look at news as an opportunity for market makers to basically influence the market however they see fit. And what do I mean by that? Well, I have seen where there is news that is released for a certain pair, and it's supposed to strengthen that pair based off of the news that came out, and it does the complete opposite of it. Okay, so one of the biggest reasons for me personally why I don't trade news events is because literally I consider those events as like gambling. Because honestly, a lot of the times, and I'm going to show you a good example of a couple that where news events essentially they start out one way, they start out going high, going up, and then all of a sudden, by the time that candle closes, it's going the complete opposite direction. Okay, so a lot of news events are used as fake out moves, or really, I think moves that are intended to help market makers complete the patterns. So complete the MAAW or the WVVM pattern that we are all talking about. Okay. So let's go ahead and talk about specifically what are the news events that matter to specific pairs. So let's go over the news events that matter, let's say for the USD. Okay. So let's go over those. So the first news events that matter for USD is FOMC news. Okay, these are huge. And so typically, all of these FOMC news releases are basically Federal Reserve, right? As you know, Federal Reserve controls the money flow, the money supply. They create the money in the U.S. So the FOMC news releases are typically 4 times a year. And there's going to be several different ones, by the way. I'm using the title FOMC because when I show you, you're going to see that title FOMC news in the actual news releases that I'll be showing you. But these particular reports, specifically the FOMC economic projections report, the report includes the FOMC's projection for inflation and economic growth over the next 2 years, and more importantly, a breakdown of individual FOMC's members' interest rate forecast. So it's the primary tool that the Fed uses to communicate their economic and monetary projections to investors. So FOMC news will make the markets go haywire. And I mean haywire like it'll make them very volatile. Okay? Now FOMC news comes in certain forms. There's FOMC economic projections, there's FOMC statements, there's the federal funds rate, and there's FOMC press conferences. Typically, you will find that all of these things are literally released in the same time frame. And I'll show you that in a second. Okay? But just know that the ones that I'm going to share with you are the ones that matter with all these different currencies. Okay? So the next one that we're going to talk about is going to be NFP, or non-farm roll, or non-farm payroll. Okay? It's basically the unemployment rate is what it is. Okay? So why is this important? So the change in the number of employed people during the previous month, this excludes, by the way, the farming industry. Okay? This is a vital economic data release that happens at the beginning of every month. The combination of importance and earliness makes for the hefty market impacts that it makes. The job creations, it tells us how well the job economy is going. Okay? So this will directly impact all USD pairs. So generally speaking, let's say, for example, the last month for November, the forecast was to have about 455,000 for new job creations, right? The new job creations for November 5th, 2021, as I'm recording this, was 531. Okay. So it was actually more than the forecasted, estimate. So because it was more jobs created basically signals a stronger economy. Stronger economy means a stronger dollar. Okay? So, for example, on October's of 2021, October's forecast was 490,000 new jobs created. October's numbers came in at 194,000. So well below what they were expecting. So what does that signal for that month? That the economy basically is not growing as fast as it should be. Right? So that's a negative impact on the US dollar, which should basically decrease the value of the dollar. Okay? September's numbers, let's say, was 720,000 expected. And the actual number was 235. So same thing, negative number, it negatively impacts the actual currency in a bad way. So meaning like if you're looking at Euro USD or Pound USD, and these numbers come out like that and they come out negatively, that means that you should expect to see the pound go up because the pound should be stronger than the dollar at that particular point. Okay. The next one is PMI, which is Purchasing Managers Index. PMI is basically the leading indicator for economic health. Businesses react quickly to the market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. This is basically what this is basically a survey of purchasing of about 300 purchasing managers, which are asked to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, inventories, all that stuff. Okay. So anything greater than the actual forecast is obviously good. Anything that's less than the actual forecast is looked at as negatively. And this is going to be for a lot of what we're going to be talking about for a lot of the rest of the actual other currencies as well. Because this PMI, CPI, all that stuff really it also goes with the other currencies as well. Because each currency has their own version of PMI, their own version of CPI, and all that stuff. And we're going to get to all those as well. But just know that there's going to be a forecasted for each of these things. For each of these news events, there's going to be a forecast of what the market is expecting, right? And so anything that's above that forecast is looked at as a good thing for the currency, and everything that is not meant is looked at as a negative thing for the currency. It's kind of this. It's basically the same thing as like earnings reports in the stock market, right? Analysts project Apple will earn such and such amount, by the end of the quarter. And if they meet that or succeed that, that's looked at Apple as like a very bullish sign of health for that company. If they don't meet their numbers, then that's looked at as a negative light, as the company's not growing enough as to what investors would like it to grow. So the next thing that matters is going to be CPI, which is the Consumer Price Index. Now, CPI news, essentially what that does is it's released monthly. It's about 16 days after the month ends. And consumer prices account for a majority of the overall inflation. So, inflation is important to currency validation because rising prices lead the central bank to raise interest rates out of respect for their inflation counterpart. So the average price of various goods and services are sampled and then compared to previous samplings. It's the same thing as anything else. There's a forecasted amount percentage, and then it's either meets or doesn't meet that requirement. It exceeds or is below that. Okay. So PPI is basically Producers Price Index, and it's essentially the change in the price of finished goods and services sold by producers. Now, it's the leading indicator of consumer inflation when producers charge more for goods and services, the higher the cost are usually passed on to the consumer. So essentially, this is what jacks up the prices for your milk, your chicken, your eggs, stuff like that. Okay, and it's the same thing. It's there's a forecast and then there's the actual percentage number. Meeting or exceeding is good. Decreasing or negative number is just bad. The next one is retail sales. There's going to be two different, when you look at retail sales, there's going to be two different scenarios. One is called core retail sales, and then the other one is retail sales. They're both out in the same day, so it's, they're both out at the same time. But essentially, it's the change in the retail value of sales at the retail level. Okay, this is the earliest and broadest look at basically the vital of consumer spending data. Okay, it's basically how we're spending our money. It's the primary gauge of consumer spending, which accounts for the majority of the overall economic activity. So if we're not spending money, that's not good for the economy, right? Our economy, specifically in the US, is a spending economy. We like to buy things. So if we're not buying things, it's not good for the economy. And the same thing, there's percentages that are forecasted, and then there's actual percentages. A positive would be good, a negative would be essentially bad. The next one is going to be the GDP, which is the gross domestic product. Essentially, what it measures is the annualized changes in the inflation adjusted value of goods and services produced by the economy. The GDP is basically going to be the broadest measure of economic activity and the primary gauge for economic health. Okay? And the same thing, there's a forecast, and then there's, what the actual numbers is, positive or negative. And same thing, it'll negatively or positively affect the currency pairs. And the last thing is any Fed chair announcements. The Fed chair at random times starts to make announcements. These announcements could be every month, every 3 months, whenever they see fit to make any kind of announcements regarding our change to any kind of policy. So you'll see on the news that I'm going to show you is basically it'll say like Fed chair speaks or something of that nature, or Fed chair conference. Any of those events will trigger volatility in the markets, especially fair ched conferences and stuff like that, because those are like not scripted in the sense of like they don't give out a statement first. Those are like literally he's live and he's just talking and we don't know what he's going to say. And so anything that he says could literally make the market go up or go down. So I know that there's a lot of news events that matter. And believe me, there's actually a lot more that, get produced every single month. But these specifically are the events that matter for the USD, for the dollar, for the US dollar. Okay. Now, I'm going to show you the rest of the currencies so you can see what matters to them. And then I'm going to show you the different tools that you can use to basically keep track of this stuff, right? Because it may seem very overwhelming and it may seem a lot, but it's actually pretty simple to keep track of. And I'll show you how to do that. So let's go over the euro and pound news that matters. Monetary policy. Okay, monetary policy matters. GDP matters. Anything from the Bank of England government speeches. This will be the equivalent of like basically like the Fed chair for the US speaking, right? So the Bank of England, think of the Bank of England as like the Fed for euro and pound. Okay? They're the ones that make up the rules and stuff. Same kind of concept. Okay? The average earnings index, retail sales, PMI, and anytime the EBC president talks. Same thing. Okay, so the EBC president, BOE government or governor, uh, think of those as like Fed chair talks, essentially, where anything that they say, these are not speeches that are pre-planned, meaning that we don't receive the statement first. A lot of this is literally from the top of their head, and the things that they say could ultimately impact and produce a lot of volatility in the market. CAD, monetary policy, CPI, unemployment change, GDP, retail sales, and BOC statements. So, BOC monetary policy, BOC rate statement, same thing. Think of those as the Fed for a Canadian dollar. Okay, these, and you'll see this is a kind of a thing that all of the currencies pretty much matter the same way. Okay, but these are the events that matter. And finally, trade balance would matter for the Canadian dollar. Now, for AUD NZD pairs, I'm choosing this because they're pretty much the same thing. RBA rate or cash rate, this is basically their same equivalent as the monetary policy. Unemployment rate changes. RBNZ is basically Royal Bank of New Zealand. RBA is Royal Bank of Australia. Okay, so that's where the differences are. But essentially, they're literally the same thing. New Zealand rate, monetary policy, inflation expectations, and GDP. So you can see a common theme between all the currency pairs are literally the same thing. I think the one that's the easiest to follow is probably JPY and Swiss, and here's why. Because all you have for JPY really is monetary policy. You have press conferences from the Bank of Japan, and then same thing, Bank of Japan government speeches. This is essentially Bank of Japan is like essentially the Fed to them. Okay, so these are pretty simple. These three things are what matter with JPY pairs. And Swiss is literally, I believe, two things: monetary policy and the press conferences from the SMB. SMB is like their version of the Fed chair. Okay, so those are the actual news events that that matter the most when it comes to those pairs. Now, let me go ahead and show you how to follow the news the easiest way possible. So let's switch over to uh, the charts and I'll show you how to do that. All right, so first things first, if you just literally Google Forex news event, you're going to get links to several different calendars, right? And these are just calendars that basically let you know when the releases are coming for news events. Okay, so let's say you click on the fxstreet.com here. And all of the different websites, by the way, are going to have the same events. It's just the way that they're displayed is kind of, it's kind of customizable depending on which one you go with, right? So here are all of the news events that are going to be essentially released. Here's all the currency pairs, and then basically they use the bars here to indicate how important the release of the news is, or how volatile it should have an impact on the actual market. Now, honestly, for me, like, I just worry about high impact news. Okay, high impact news is all that I care about. So essentially, once you filter that out, you'll see that it condenses it to literally the most important things, which is RBA interest rates, rate statements, GDP numbers, and things of that nature, which is what really matters. And this is where the volatility comes into play. Okay. Now, obviously, you can customize this to time frames and all that stuff. It's great. So you can use any of this, any of these different calendars, because they're all going to show you the same thing. It just shows it to you in a different format, essentially, right? So this one here, for example, this is off of Daily FX. You can, same thing, change it to where it's only giving you the high importance events that matter. You can change it, obviously to whatever you want. And then you can change to how often do you want the news. So like, let's say the next 7 days, right? So here's the important news coming up for the week, essentially, right? And because I've chosen the importance of high, it's only going to show me the stuff that matters, right? So the stuff that we literally talked about, the RBA interest rates for Australia, the GDP numbers for Euro, the trade balance for Canada. So all these things, GDP numbers for United Kingdom, the inflation rate for the US. So all the things that really matter. Okay. Now, the one that I use is I use Forex Factory, forexfactory.com. And the reason I use this because I have a login for it and it's just easy for me to filter. So this is what it is, and it just literally gives it to you straight, very upfront. The cool thing that I like about it is that when you go up here to filter, you can just filter the currency specifically that you care about, right? So for me, I don't care about China, which is this is what this is. So I uncheck that. I don't care about yellow folders or orange folders. I only care about high impact events. High impact events on this particular website are filtered via red, orange, yellow folders. So meaning the red folders obviously are the high impact, the orange folder are like medium, and then yellow or low impact. So I really don't care about yellow or orange. I really just care about the high impact news events that matter, that are going to create crazy volatility in the market. Because I do not want to be in a trade or in the middle of a trade or looking for trade setups when I know that news events are about to release that introduce volatility and unknown into the market. So I just hit apply filter and then boom. So here it literally just shares with me the simple stuff that matters to me, right? So all of this, you can see the pair, CAD, Euro, USD, and for me, especially the time. This is based off of East Coast time, so New York time. So for me, I live in the East Coast, so this matters to me a lot. So this makes sense for me to follow this. Okay, on the side here, here are all the forecasted numbers, right? And then previous and then actual numbers that are released. So, for example, if we go to last week's news events, these are all the crazy news events that made it, that made it to that made high impact news essentially. So you can see things that we covered: GDP, BOC governance for Canada, Fed chair for USD, non-farm payroll. And essentially, we could see the numbers here that matter, right? So here's the actual forecast, and then here's the actual real number, right? So you could see they were expecting 36,000, but they ended up getting 153,000 unemployment change. That's good news, right? Those are good things by a lot, actually. So if you click on here, it'll kind of show you history. It'll explain everything here so you know what it is. But you'll have the numbers here. So this is what I look at for just to keep me abreast as to what's going on or what's happening today. Okay, if I see that there are a lot of things happening for a specific pair that I'm trading, then I'm very less likely to trade that pair for that day, because I don't want to be involved in anything that's going to make the market go crazy or whatnot. And you can see, so this is last week. This is Monday, Tuesday, Wednesday, Thursday, Friday. So pretty much every day there was some news on certain pairs. Okay, if you go back to the previous week, you can see NZD, USD, GBP. For that week, the only thing that matters was Euro PMIs. NZD had monetary policy. USD had the FOMC meetings. And GDP had the Bank of England government talking. Right, so these things are what mattered. So for me, when I look at this, I know that based on everything that I've been doing for so many years now, I know that NZD pairs and AUD pairs are very, very volatile. That means that they move. Whenever you see a rate policy, cash rate, monetary policy on an NZD AUD pairs, you better believe that those pairs are going to be moving a lot for those events. So at 8 o'clock Eastern Time, NZD and AUD pairs, you're going to see them moving. Specifically, in this case, it was NZD pairs. So you would see the NZD pairs moving a lot. Okay? Throughout, you'll have a lot of volatility essentially throughout those pairs. And again, previous week, you can see monetary policy minutes for AUD pairs. You can see monetary policy hearings on pound pairs, CPI news on pound pairs. So this lets you know when to expect the volatility to happen. So 2 a.m. Eastern Time, this is when you can expect. This is when the news gets released for this CPI. So you can expect some volatility there. Now, some news events may create a lot of volatility. Some news events may not create that much volatility. So you might notice out of all of the different things that I talked about being important for, let's say, pound news, that maybe CPI news or PMI news for pound pairs or for euro pairs may not cause that much volatility. Okay? And that's okay. If you look at the folder here, you'll see that a lot of the numbers are really small and they kind of don't always change, right? So you go back, if we start going back to 2020, 2021, the differences are not that big, right? So if the differences are not that big, then you probably should not expect any kind of crazy move or any kind of big surprise, essentially. It's only when the numbers are like really skewed, they're really different than what they expected. But you see most of these our numbers are within reason of each other. you know, so they don't cause too crazy things going on. The things that do cause crazy stuff going on or volatility in the market is anything that has to do with monetary policy, anything that has to do with FOMC, anything that has to do with Fed chair. Those things are going to be causing a lot of volatility, NFP news, things of that nature. Okay. So I use Forex Factory for all of my news events. It's very simple, easy to use. Create a free account, and you can customize it yourself to however you want to. Okay. Now, let me show you what happens during one of these news events, right? What does the actual market look like when these news events are happening? So let's go ahead and let me flip over to a recorded video that I have of that actually happening. So actually news happening during a news event, high volatility news event. So let me show you what that looks like and why I do not want to trade the news. Here's why. All right, guys, so take a look at this news release. This is on Euro NZD. And first of all, look at the spread. Look at the white and red lines. The in between, how they separate or come close together, that's the actual spread, right? So look at how big, how small, how big, how small it gets literally within seconds of each other. So you got to ask yourself, do you really want to be trading in this type of environment, going back and forth, back and forth, back and forth? You don't know whether it's going to go up, you don't know whether it's going to go down. It's literally like gambling. So why would you want to put yourself in this kind of situation when the odds are not in your favor? You want the odds to be in your favor every time that you simply trade. And when you have things like this that you cannot control, there's no reason at all to be in a market with this type of conditions. All right, guys, so now that you see how volatile essentially trading the news or during that time frame can be, this is why I personally do not trade during those high volume news events, especially FOMC, specifically FOMC and non-farm payroll and things of that nature. Monetary policy, because I know it's going to be very volatile, and at the end of the day, man, it's just really gambling. Okay, you don't have an advantage because really market makers can do whatever they want with it. They can manipulate the price however they see fit, and to me, it's just not worth it at the end of the day. Okay, so let me go ahead and now show you some live trading that I did during the U.S. session. So hopefully you could see how you should be trading, specifically if you're trading the U.S. session, which I tend to do a lot more nowadays than the London session. I'm not going to explain everything to you that's going on because the video itself, once you start to watch it, is very self-explanatory about what the setups are, the directional bias and stuff like that, because I show you all that stuff in the video. So I'm not really going to go into in depth as far as what the setups are, because again, it'll be pretty clear the setups that I'm looking at, what they are and things of that nature. So without further ado, let's go ahead and let me show you that video and enjoy some motivational speeches while you're watching that trading happened. All right. All right, guys. So you could see in that particular trading session, three pairs, pretty clear what the setups were, the directional bias, and all that stuff. So, every day is going to be different. Some days you're going to have five pairs show, all five of your pairs show some type of trade setup. Other times there may be none. Sometimes you might end up with a loss, and that's okay. But let's go ahead and let's talk about homework. So the first thing with homework, with this being the final week, is you need to make sure that all your homework is turned in from all the previous weeks. You've had plenty, in my opinion, plenty of time to get caught up on the homework because we haven't had tests or anything like that. All right, so everyone should be caught up in the homework. If you have not turned in any of your homework, then, or turned in some of your homework, then this is the last week to do so. If you want to pass and if you want to get your diploma, move on to the advanced course and stuff like that. Secondly, is make sure you turn in your final exam. So the final exam is going to be emailed to you Monday night. So Monday night, the final exam will be emailed to you, and you'll have the entire week to do it. Okay. Make sure you turn that final exam in by Saturday. So by Saturday. All right. So what I want you guys to do is I want you guys to create a demo account and start to trade on the markets. So open up a demo account. I don't care the broker. The broker really does not matter as long as it's a demo account, not a live account, a demo account. If you're using TradingView, you can do the paper trading account right on TradingView, and you can literally trade right on TradingView if you want. Okay, but open up any demo account, and I want you guys to start trading the live markets, meaning, trading obviously where you're not back testing, you're not replaying the charts, you're waiting for the live markets to give you trade setups. Okay. And so what I like you guys to do is I want you guys to take 25 trades and log them on your trading journal. Now, obviously, you're not going to take 25 trades in a week. Okay, so however long it takes you to do 25 trades, that's what I want you to do. Okay? So however long it takes you, 2 weeks, 3 weeks, 4 weeks, a month, month and a half, the length of time does not matter. What matters is that you follow the rules of your trading plan that you've been back testing, right? And now instead of replaying the charts, you're taking trades based off of live data. Okay? And 25 trades is a very small sample size. I just want to see where you're at. Okay, I want to see where you're at. So 25 trades. Again, there's no rush to this. I don't care how long it takes. The important thing is to follow the plan. Do not rush the process. Okay? Take your time with the trades. Obviously, turn in the trading journal once you get to 25 trades that you've taken. Okay? And like I just said, do not rush the process. Take the best trades possible. Okay? Quality over quantity always. Quality over quantity. Okay? I cannot stress this enough. Take your time with it. If you happen to take 2 trades in 1 week, then that's what it is. Right? Do not rush the process, because in real life, you're not going to be rushing the process. Okay? You're not going to be rushing the trades to turn in 25 trades. That's not how this is going to work in real world. It's very simple. Either the trades are there or the trades are not there. Okay? Now you should have a much larger sampling size, obviously, because you're no longer just focusing in on one specific pair, right? You should have multiple pairs now that you can trade. You've been back testing now for several weeks, right? So you should have a good idea of what pairs you want to trade. And again, this is a demo count, so wins or losses don't matter at this point. I just want to see how you perform in a live environment where you're not replaying charts. Okay, once you turn in your 25 trades, I will literally go through every single trade, what's right, what's wrong, and I'll give you feedback on those trades. And then we can start the process, right, of you guys, practicing or going to live actual accounts. Or if you're the type of person that wants to do like F1, the FTMO trade challenge or anything like that, then we could help you get prepared for that as well. Okay, but take your time with this. Follow the plan. All right, guys, it's been a pleasure having you for 12 weeks. This is not over just because the 12-week course is ended. Okay, you're going to have access to all of the videos, obviously. If you get a diploma, if you've turned in all your homework and tests and all that stuff, and you've been, and you pass and you get a diploma, the next week you're going to have access to the advanced course and the Blueprint Summit, which is like a shorter version of this 12-week course. But there are some things in the Blueprint Summit that I did not talk about in this 12-week course. So there's going to be some things there as well that you're going to get, that you can, get up to speed on as well. Okay, so this is not over. Group sessions are still going to be accessible. You can come in to all the group sessions you want. Basically nothing changes except the fact that every Monday you're not going to have a new video. You know what I mean? A new lesson, essentially. That's the only thing that changes. Everything else pretty much stays the same. You still come to the group sessions, right? We still have the weekly analysis videos and all that stuff. So all that stuff stays the same. Okay, but just focus in on taking those 25 trades, logging them on the journal, sending them over to me so I can go through them and get you some feedback on them. Okay, so it's been a pleasure to have you guys, and do the best possible things that you can with these 25 trades. Take your time. All right, guys, we'll see you guys in the group session, and have a great rest of your week.